What's going on, guys? So I want to do a technical analysis video. I keep seeing all of these AMC tweets and mentions and everything pop up. A lot of people very upset. What they're doing is, illegal, and they're borrowing more shares and this, that, and the other. Okay, let's put all that to the side for just a moment and kind of look at this bigger overall picture of what's going on. Okay, it's not just AMC who is being sold off. It's many small cap stocks, as well as mega cap stocks. Take a look at Tesla, for example. Take a look at what they're doing to Nvidia, what they're doing to Apple, what they've done to Coinbase. So there's so many different stocks from high to low. No one is safe, right? This is a bear market. Let's accept the facts and the reality of this, that at this point it is what it is. And there's a couple of things that you can do about it. So without looking at all of the other intangibles, because I'm going to be very honest and very blunt and very frank, a lot of retail traders have been looking up to certain YouTubers or certain influencers or certain people in the space that have been hell bent and adamant about a short squeeze and about synthetic shares and about this, that, and the other. I'm not arguing any of those points. Okay, let's just put those to the side for just a minute, because a lot of you guys are stuck, and now at these prices of $10.30, a lot of you guys are now starting to go into the red. So you are starting to feel that pain. So the first people that were feeling the pain was everyone that kind of got in late to the party on the AMC run up. Now, mind you, before we had this first little squeeze here where we went to like $25 or $20, and when they shut down trading and all that stuff on Robinhood, a couple of guys and myself in the Discord were actually in at $2, right? So, I never caught the whole $72 run up. I sold on this first run up, and then I kind of just played scalps through the rest of the way on each single run up here. Now, I know a lot of people don't like to trade, right? Especially when we talk about the small cap stocks. A lot of people like to, buy and hold and wait for this thing to go to, I don't know, whatever price target you have in mind. So there's a little bit different theory there between a trader and someone who's holding long term. If you really believe in the company, okay, if you really believe in your portfolio or your stock pick, then why let a bear market, right? Which we have bear markets, right? Why let a bear market influence you to cause you to be checking YouTube for every new update, to be checking Twitter, to be, making tweets about this and calling out this person and calling out that person and calling out, the SEC and calling out, short sellers and calling out, your YouTuber who you used to love, now you don't love, maybe you love them, maybe you don't. Why do all that if your horizon is 5, 6, 7, 10 years down the road? Forget about it. Dollar cost average on the way down. If you truly believe in the fundamentals and you believe in the growth and you believe in the story, then go ahead and continue to dollar cost average down. But I think a lot of you guys say that you're long-term investors, but you guys are actually looking for that short-term trade, right? You guys were actually looking to, maybe hold this 5, 6 months, and then I want to wait for that big run up and I want to sell out and make my money. Or, maybe I want to hold this for a year or two and I want to see this thing get to 100. I want to see it go to 200. I want to see it go to the 1,000. Someone on Twitter said this thing's going to the moon, but you guys are looking for that instant gratification, that instant satisfaction when it comes to these trades or these investments, right? So first things first is, are you an investor or are you a trader? Are you a swing trader or are you an investor? A swing trader is someone who's going to play technical levels. You're not going to let all of the other fundamental intangibles get to you. For example, I'm a full-time options day trader. I'm going to trade things like Tesla, the triple Qs, Nvidia, AMD, so forth and so forth. I could care less what AMD, Nvidia, Tesla do on earnings. Is it going to sway the price? Of course. Is a news headline, going to sway the price? Of course, but it still has to break and or flush through a technical level for me to enter the trade. So for example, if I'm just going to use AMC as an example, The clear indication to have gotten out of AMC was when it lost its weekly, and this is the weekly time frame. Each individual candlestick is going to represent a week's worth of time. The time to have gotten out of AMC was when it lost the $25, $26 area. Now, a lot of you may be saying, well, why would I sell if I was, in the 30s or in the high 20s? Why would I sell at 25? Well, let me kind of give you a technical analysis reason as to why you would sell. You would sell when a stock loses the 50-day moving average, because that's telling you who has control of the stock, right? Sellers or buyers. If something is below its 50-day moving average, of course it can have green days. Of course it can move up, but the stock's really not going to go higher. It needs to reclaim the 50-day moving average for the bulls to kind of take control of the stock again. So you could have essentially taken a few point loss here in the mid 20s and saved yourself the downturn all the way to $10. Now, some of you are going to say, well, why would I sell at 25 when I can just add to my shares down here? Well, here's another scenario. Whether this plays out or it doesn't, here's just another scenario. So let's say, for example, according to where we're at now, AMC has just recently, as of yesterday, lost its 200-day moving average on the weekly time frame. This is not good. This is for if there was no hype behind AMC, right? If we didn't, look into how many, synthetic shares there are, or what the company's doing, or what the all the other jazz, right? All the other stuff that you guys are reading online. If all of that stuff you didn't know about any of that stuff, and you're kind of just looking at this chart here, and if this was any other stock, a stock below its weekly 200-day moving average is extremely, extremely bearish. There is no room or no way that I myself, and I'm speaking for myself, am going to invest in a stock that's below its 200-day moving average. Now, a lot of you are going to say, well, that's stupid. Why would I not accumulate more shares down here at the bottom? Because when it does come higher, I'm going to be, who's going to be better than me, right? Okay, I get that point. But if that's a valid point, then why not let it find a bottom or find a new home and then let it reclaim the 200-day moving average? So as of right now, the 200-day moving average is sitting at $15. So for me, the stock can go to 10, it can go to 8, it can go to 7 or whatever. That's okay. I'm willing to let those few extra dollars go to the wayside and allow this thing to kind of reclaim its 200-day moving average and prove to me that it's actually going to go higher. And at that point in time is if it does again re-lose the $15 mark, well, I have a clear line in the sand that I'm going to use for a stop loss and take a very minimal loss, even though I'm looking at it as a long-term trade or a long-term hold. I'm talking to everyone who wants to hold this thing, who's been holding this stock for over a year. I'm talking to you guys. I'm not talking to the average day trader. The average day trader is going to play the levels in the technical analysis based on what the chart is showing. It doesn't really care about all the other outside noise. I'm talking to the people who are holding this stock. So are you really going to make that much more money if you buy this stock at 10 or 15? If the stock goes to 30 or 35, are you really going to make that much more money? Is that, $2 or $3 worth of, stress and pain that you're saving yourself by saving a couple bucks to get in at $10? Is that really going to make a difference in your bank account when the stock's trading at $45, right? What's $5? $5 is $5. I understand it. But in the meantime, I do not want to just accumulate down here at $10 when we've lost every macro level of support. And it looks like this is going to find a home at $8. It looks like AMC will find a home between $8 and $9. That's just the way that it's looking. This is a huge trend line here from a demand zone on the linear regression channel 50 on the weekly time frame. Okay, if this was to lose, let's say $8, then there could be even more of a major reset in a stock like AMC to where its home could be in the single digits for a very, 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 very long time. Now, if you don't believe me, there's a stock I want you to do a little bit of history, since a lot of you guys like to look up things online regarding AMC. Go ahead and look at Cisco CSCO from the .com bubble. Cisco is still around. Obviously, it's a networking company, but if we kind of look at it, they had an valuation that was larger than Microsoft back in 99, 2000. And when the dot-com bubble hit, not only did Cisco lose its 50 and 200-day moving average, but in 22 years, it has never reclaimed those levels. Now, the point I'm trying to make with that reference is that in this bear market and in this correction, there is some stocks, AMC would be included, that never belonged to be sitting at $72. It never belonged at $40. It never was meant to be trading at $30. So now that the market is kind of readjusting and correcting itself, this could come back potentially $7, $8, $9. And for the remainder of its, trading lifetime, let's say the next cycle of 5, 10, 15 years, could be between 7 and let's say, I don't know, $20, right? Just giving an example. This is just an example based on history. So if that's the case, is this trade worth it for you? Is this hold worth it for you? All of this stuff about, the mother of all short squeezes and all this nonsense is nonsense, guys. If you guys have been trading for longer than 5 years, anyone who has been trading longer than 5 years is going to know that this is nonsense. Now, was this a squeeze? Absolutely, 110%. Was this a squeeze here? 100%. Was this a gamma squeeze here? 100,000%. Now, could you have made money on these trades? Yes, but these are meant to be momentum plays, momentum trades. You trade this, you trade this, you trade this. You trade this. You don't buy here, 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 holding, hoping it's going all the way back up here, guys. There's nothing that makes sense about that. I'm just going to be very, very honest. Now, this video, to some of you guys watching, you guys are not going to like it. But, at some point in time, there has to be a reality. There has to be, it doesn't matter. It's not about what the media is saying, that GME and, AMC is causing this bear market. Guys, all this is bullshit. Just forget about the media. Forget about all this other nonsense. Just forget about all the crap and just look at what's going on with the stock. Ever since here, which is going all the way back to 5/31 of 2021, this stock has been making lower highs after lower highs after lower, and we still have not found the bottom yet, highs, right? This stock has just been making lower highs after lower highs after lower highs after lower highs for over 12 months. So is this magically just going to shoot up like this? I don't know. I mean, my opinion would be no. Okay. My opinion would be no. But again, crazy things have happened, right? Crazy things have happened. But here's the deal. If you have money to afford and you have money to just go ahead and just leave it sitting there and hoping for, better days, then leave your money sitting there for better days. And then obviously, if it ever does do this, I'm sure you'll hear about it and you can sell out of your shares and do whatever you want to do. Now, if you're someone who's got maybe a little bit of money and you're like holding and hoping and listening to every YouTuber, talk about X, Y, and Z as to the reasons why, we're down here and when we're going to bottom and when we're going to reverse and when we're going to do this and all this other nonsense, but you don't really have that much money and you're kind of relying on this type of trade, or not relying, but like, this is like one of the biggest holdings that you have, or maybe this is like the only stock that you're kind of playing. Maybe you dabble in a couple of other stocks, but the majority of your time is spent watching AMC. It's not worth it, especially in a bear market. There's so much money to be made. Tesla is down 45 points. Buy one options contract on Tesla, losing a daily level, and get 20, 30 points on it, and you'll make good money, guys. Nvidia is down $6. The triple Qs are down $6. There's so many stocks that are down today where you could be in and out trading, making money versus just holding and hoping and waiting for something to happen. The point being here is losing this 200-day moving average on the weekly time frame. This aggressive red candle is very, very aggressive. It looks like AMC is going to find a home at around $7 to $8 in the near future. Hope this video kind of helps you guys. If you guys do like this, technical analysis video on AMC, subscribe to the YouTube channel. I'll see you guys on the next one.